white shirt while travelling in Mumbai trains.
Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts on the show. Joining us today are Kalra of Target Investing and Vivek Mavani, who's an independent investment advisor. Many thanks to both of my guests for joining me. On the show today, the passenger vehicle and commercial vehicle space in particularly, especially the two-wheelers, saw some recovery in their May sales. Four-wheelers continue to struggle. Cooling solutions, so that's something that we want to discuss. Cooling solution companies have guided for a strong second quarter considering the prolonged summer and prospects of a below par monsoon. We ask analysts what they feel is a good bet in this space. Apollo Hospitals came out with a decent set of numbers. We asked them about the hospital space, whether it's the best play in the hospital space at this point of time, and we talk about whether the crude prices which have come off offers any kind of benefit to buy any kind of paint company. So that's something that we will speak about with our guest today. So let's start with the first one, and the first stock is the auto sales numbers that came out. Not the best, most encouraging numbers, especially on the four-wheeler side. We ask our guest whether is there any stock in this place in the auto space, or we can extend even to the auto ank space that they like at this point of time. Vivek, over the past few months, we've seen that the auto sales numbers have disappointed. Are we nearing the bottom, or is this trend here to stay? And auto ank is a large sector. Anything in this space that you have recommended your clients in the near term to start accumulating?
Okay, a couple of things. To come to your question, is it the bottom? So there are two types of bottom. One is the stock price bottom, and the other is a business cycle bottom. So now, as far as the volume numbers are concerned, it's been almost 6 months that passenger car sales, two-wheeler sales have been disappointing, showing a sort of a negative trajectory. But if we look at the stock prices, whether it's a Hero MotoCorp or a Maruti, for example, or even Ashok Leyland as a matter of now, I mean, they seem to have reached some sort of a stability where the stock prices have stopped falling. Maruti corrected from upwards of 10,000 to almost 6,500, and it, in spite of the numbers disappointing, I mean, the latest being 24% negative for the month of May, stock price is not falling. So my sense is that stock prices have bottomed out, but from volume perspective, it probably we are still a couple of quarters away in terms of returning back to that growth trajectory. Now, my preference is for Maruti and Hero MotoCorp, including Bajaj Auto, but I'll speak about Maruti since the discussion is about four-wheelers. So in terms of Maruti, even if there is a revival in demand in the next few months, I don't know whether it's going to happen in the next 1 quarter or it's going to take longer, or next 4 quarters, but the wholesale dispatches from Maruti is probably going to take 1 quarter longer after that, even if there was a demand revival on the consumer side, given that the dealer inventories are anywhere about 1.5 to 2 months. So probably the dealer inventories will first get cleared, and then Maruti will increase their production after the production cuts in the last couple of months. But from a stock price point of view, the valuations are attractive in terms of multiples. I mean, it's trading at about 18-19 times current year earnings, probably 20 times if we factor in some decline in earnings. But even if we were to look at flat earnings, given slightly superior revenue mix based on the higher end models sustaining the volumes, and it's a lower end where the hit on the volumes has been more significant. But I'm positive on Maruti at less than 7,000. I mean, 6,500, 7,000 is a fair range. Worst case scenario, I think the stock can fall to a 6,000. I doubt if it will fall significantly less than 6,000. So we have maybe about 10-12% downside risk in Maruti. But from a 3-year perspective, I see a terrific opportunity.
Okay, but anything that you've seen particular, what's gone wrong with Maruti? Till a year back, everyone wanted to buy Maruti. Obviously, there was a consumption slowdown, but did you anticipate, it will fall from levels of 10,000 to close to 6,000?
Well, if you recollect our discussion last year when we had on Maruti, when it was not maybe at the peak, maybe not at 10,000, but we had spoken about Maruti at about 9,000, 8,500, 9,000, and that time I was cautious. I mean, I recollect on this very program at that point of time, I was cautious on Maruti. This was about maybe little more than a year ago. But after the stock price correction, I'm quite okay on Maruti. I think the downside risk is adequately protected. The other part of it, did anybody anticipate? Well, I think nobody anticipated this kind of a serious slowdown or even decline in volume numbers for auto companies. I mean, nobody, including people within the auto sector or the senior managements of companies. I mean, I'm sure even Maruti until 2 quarters ago would not have anticipated would not have anticipated more than 20% decline in volumes. I mean, and it can be said for every company in the auto space. I'm sure the management of Hero also would not have anticipated a 15% decline in volumes. But I mean, it's come unanticipated. But I think the stock price is bottomed out.
Okay, what about you? What's your sense on this auto space? You're looking at the numbers, and I believe you also speak to a lot of dealers. You do these checks yourself on the registration numbers. What's the trend that you are observing? Are you seeing pain to be there? And in the midst of all this cumulative thing, which is the stock to avoid, which is the stock to buy?
So I think in December we started speaking of auto sector as a whole pack being negative, right? And auto Ank, we reduced the weightages by 80 to 85%. And we were anticipating this kind of a slowdown, and we anticipate that this will go down further. These are more of hopes that the new government will come, give out some packages and benefits to the taxes, the kind of taxation automobile face, and so I think there's another kind of fluctuation. If you see past couple of years, Uber and Ola supported a lot of four-wheeler growth, especially for Maruti. That has gone out of the system. That has almost become 1,000, 2,000 kind of sales, which was around 10 to 15,000. So that has removed, and that kind of adjustment is happening to the number. Now, if you remove that factor, second, the liquidity at the dealer level. Forget about the customer level. Customer level still it's fine, but the dealer level has gone very dry. It's like almost next to nil. So either you have to give a mortgage for a further car inventory, or there's a check on the inventory. Earlier, what used to happen, the inventory was built and you were given that kind of credit line. Now they're checking the inventory. So that has become really tedious for even the dealer to take in. And even the dispersal rates have gone down. So these factors are affecting the whole industry. It's not only a rate cut which will help. It's not only a booster package from the government, which I think will come out highly unlikely, at least in the next couple of months. They want to see the situation. So I see a lot of negatives even right now. These stock prices are forming a base on a hope. When that hope goes out of the investors' sentiment, they will come down even further. So if you see Maruti 6500 is the base for that, or if you see Hero 2600 is the base for that. And I think these bases are on the hopes, and any bounces, it's better to sell out. For me, Bajaj Auto stands out in the whole situation because the market share they've gained. Now they are coming out with further more models coming out, and now they're starting their electric phase. So now if the two-wheeler they're trying to launch in maybe July or August, if that comes into the electric scooter end of it, that'll be a really game changer for Bajaj Auto. Because they have gained share in the sub-premium level, I think over there a Hero will find it very difficult to push on and regain that kind of, because they're already lower on the EBIT margins. So any further cut will hurt their profitability. So I think it's better to stick with Bajaj Auto in the system if you want to really have an auto exposure as of now. Other than that, I don't feel anyone to be bought over just for domestic growth.
Okay, that's the view that's coming in. Maruti as well as Bajaj Auto were discussed as far as this question was concerned. The second one is basically the cooling solution companies. Most of them have actually will be in focus. Summer has been extended. That's the prediction that's coming from IMD. Is there any company in the cooling solution space that you would want to buy? No doubt, companies like Blue Star came out with very strong set of numbers, but it was totally opposite for Voltas and Symphony, which came out with a very poor set of numbers in the fourth quarter. So, Samir, I'll start with you. Anything in this space that you like?
So I think this space is more seasonal. You have to play it for March and June quarter results rather than anything else for the whole year. So I'll stick to Blue Star. We already have a part ownership in that. And I feel what has happened, the capex has kicked in for Blue Star recently. So that has helped out to create more larger supply. Even if you see that in quarterly results, that was the case out here. And they are able to add new distributors as well. So that is helping out on both the ends for Blue Star. And I think I'll stick to Blue Star out of this, but it'll be only till maybe August season.
Okay, what about you? Anything that you recommend your clients in this space, Vivek?
Not really, in the sense that, yes, it's a seasonal business, but it's a season that comes every year. So, this year is no exception. And every year we tend to at least feel that there is an extended summer. But from really the stock price point of view, I have not found it really exciting to play this year at least. Also, the disclaimer is I have not been tracking very closely Voltas or Symphony or Blue Star also. It's just a cursory tracking, not much of interest in the sector. But a larger point, from a consumer spending point of view in the economy, big ticket, high frequency, what we are referring to is FMCG, there's a slowdown. At the other end, we just discussed auto, which is once in a 5-year or once in a 7-year purchase, big ticket. There also we have a slowdown. Consumer durables, where air conditioners and air coolers will fit in, is somewhere in the middle. So to think that at the two ends, if there is a serious slowdown, to think that some in the middle, ACs and other durables will not see a slowdown is a slightly difficult to understand conceptually. So that's also the reason of my limited interest at this point of time, that if I have to play for consumer spending, I have got two ends to play rather than play the consumer durables in between.
Okay, that's the view that's coming in on the cooling solution space. Hospitals is another space. I think Apollo over the past few days has done extremely well. No doubt it's the largest chain currently, but a whole host of other hospitals are also listed, not tracked very, very closely by the market. Fortis was another one, but that actually fell off the radar because of the entire corporate governance issues. Now it has a foreign promoter. But is there something in the hospital space that our guests like? What's the view on Apollo Hospitals posting their numbers? Vivek, anything in the hospital? Well, firstly, what's your sense on Apollo Hospitals, if you like it? And what's your sense on the hospital space? Any other stock that looks interesting here?
Okay, so basically I have a bias against the entire sector, which is hospitals. So whether it is Apollo or Fortis or Healthcare Global or Shalby Hospitals, or I believe there are a couple of other smaller local chains also, local hospitals in South India. And one of the reasons is, and over a period of time, you would have noticed that my preference as investment philosophy and strategies, I prefer companies and businesses which generate return on capital, return on equity upwards of 15 to 18%. 15% is bare minimum, 18% is something desirable. Anything better than that, anything upwards of 18% is something that I'm always looking for. As far as Apollo Hospitals and the entire hospital sector is concerned, it is firstly very high on capital expenditure. They generate no free cash flows, or it's always a negative free cash flow even over a 10-year period, and very low on return on capital, return on equity. And their reinvestment needs in terms of modernization, upgradation of equipment, upgradation of their facilities is just too high that probably in its lifetime, these businesses cannot generate return on capital, return on equity of even 12 to 15% range, let alone I'm talking of 18% as something that is desirable for me. So that's one of the reasons, or that is the key reason that I am not really bullish on hospitals. But within the healthcare space, healthcare services, which is diagnostic services, which is where we have the recently listed Metropolis or Thyrocare or Dr. Lal Path Labs. I mean, that is a segment that I'm positive on, because that's a business that can give you secular growth, sustainable growth, which is upwards of 18-20% in the foreseeable future. You have a massive trend playing out from unorganized corner street side pathological labs business moving to these large chains driven by technology, driven by systems and processes, and businesses, and all of these businesses which have significant operating leverage, giving them both ability to generate high return on capital and return on equity, at the same time free cash flows. So I would be positive on healthcare services, especially the diagnostic services, instead of the hospitals. Within that, Metropolis is something that is my preference. I've spoken about it a few weeks ago when Metropolis had got listed. But that's where I stand. Hospitals is something which is a no-go area for me.
Okay, just a follow-up question on the diagnostic space, because recently we spoke to all these companies. So the trend is that almost 90% is unorganized, and the listed players and the larger players somehow don't have that pricing power to compete with that. Is that not a concern? Because we've seen that quarter on quarter and year on year, the numbers somehow, the high growth that they've done and the high margins that they've done, they're not able to sustain.
Couple of things. Even if the pricing power is not there, I'm absolutely okay with a company not having pricing power in a highly competitive space, so long as the volumes compensate and give you that growth. So if I'm looking at a 20% earnings growth, and if all of that 20% earnings growth is coming only from volumes, well, that's the best thing to happen, because someday when even if there is a 5% pricing power on huge volumes that they would have built up, there's a huge multiplier on earnings. Now, they not having pricing power is also a conscious decision, because their intent is to take share away from corner street side hole in the wall pathological labs. Now when it comes to diagnostics, I don't think a 20 or 25 or 50 rupees price difference on a pathological test which costs anywhere between 500 to 1000 rupees on an average, I don't think it should matter as much as there is greater awareness among the population in terms of quality, in terms of reliability of the data that comes out of those tests. At some point of time, well, the little savings that a patient makes is more than compensated in terms of this thing. Second thing, I would also look at a huge outsourcing opportunity that these chains have. If you have noticed, some of these large hospital chains, their pathological departments are run by either Metropolis or Thyrocare. So I have seen a couple of hospitals in Mumbai itself where the entire pathological department is run by Metropolis, and there's actually signage of Metropolis. The reports are from Metropolis and they are housed inside the premises of the hospital. That itself is a huge opportunity, because the business of this diagnostic, which was earlier being done in-house by the hospitals, is now moving here.
Okay, that's the view that's coming in. Healthcare services, especially the diagnostic space, is something that Vivek likes. What's your sense on hospitals? Is there any hospital that you all own, have recommended to your clients, and a view on Apollo as such?
So I think Apollo, the results were better, and that might continue for another couple of quarters because of the operating leverage of the new hospital they started operating. And secondly, the commentary on removal of the pledge, which they have planned for FY20. That I think really pushed up the investor sentiment and created more of short covering rather than more of long-term investors kicking in. So I think let's wait for another quarter and see how the pledge or the results move in line. Otherwise, if you see, a lot of private equity is getting into the hospital space, and that really gives private unlisted players much more bigger, let's say, leg growth in next phase. If you see Fortis, we like Fortis. We still are seeing what Supreme Court gives the whole okay or not. And that's the main reason where the investors are getting or losing that kind of interest as well, because of the reclassification of the promoter also now done. So I think now that's getting time, but I think the downside still gets opened up. And till the time Supreme Court decides on it, I would still stay away from it incrementally. So I think Fortis is a better situation, which I see in if the technical issue gets resolved soon.
Okay, that's the view that's coming in on the hospital space. And the final one is we've seen crude react negatively over the past few days. Obviously, one of the sector that benefits significantly is the paint company. But on the paint side, the numbers were not the most encouraging. Even though volume growth was seen in many of the paint companies, it was the clear miss as far as the top line and margins was concerned by majority of the companies. Is that a concern? And would you bet on any of the paint companies solely on the factor that crude is coming down, and that probably will lead to better set of earnings? Samir, any paint company that you feel is an investment opportunity, or you would not take this crude movement to make an investment decision to buy them?
So I don't take crude movement as an investment decision for any sector, because that crude movement is more speculative in nature than anything else. Because if you see the ground data, there's still supply squeeze and the demand is still not coming off. So I think these prices come in a quarter lag to paint companies or anyone who uses the derivatives. But I think all said and done, if you really want to take this kind of a bet, I think Asian Paints is the best place right now because of the new capacity they've kicked in, and their decorative volume growth is still decent enough, and I think that might continue because their industrial is slowing down, and others like Kansai and Berger, Kansai especially has a lot of industrial impact on the numbers. So I think Asian Paints is still isolated to a certain extent.
Okay, that's the sense. What about you, Vivek? What's your sense?
Well, I would agree with Samir. Even for me, the play is on Asian Paints, number one. Number two, I wouldn't base the decision simply because the crude prices have come down in the last few weeks. Few months ago, it was on an uptrend, and it went from 50 to 70 plus in just a matter of few months. So, but what is important in that is that in terms of track record of Asian Paints, which is likely to be sustained over the next 5 to 10 years also. I mean, a terrific track record of low double-digit growth, but about 16-17% earnings growth maintained over the last 25 years. And in 25 years, you have seen several of cycles in crude and a lot of other inputs, as well as several cycles even on the consumer side in terms of high demand, low demand, and demand recession and what have you. I mean, everything in 25 years, one would have seen that. That track record is likely to be maintained, maybe not double-digit volume growth, but high single-digit volume growth likely to be maintained. Very strong brand and deep penetration, and a cost structure that allows Asian Paints to be a price warrior, such that they can resort to discounting or play a price warrior and yet earn margins which are better than Berger Paints. Berger, by the way, is second largest decorative paints company. Asian Paints is the largest. Kansai is almost 50% auto and industrial paints company. So on the decorative side, actually, their market share is less than Berger. So in terms of Asian Paints, I really don't have an issue. I think every decline is a buying opportunity and can be held for a period of 4 to 5 years, maybe even extended to 10 years in that sense. Valuation point of view, maybe at about 50 times 1 year forward. So we are talking of financial year 2021 earnings that we are talking of about 28 or 29 rupees a share. May seem slightly on the higher side, but is in line with most other consumption plays, whether it's a Havells or a Titan or a Crompton or what have you, or a Kajaria. I mean, so if we were, or even some of the sanitary ware companies. So we are so basically I'm talking of comparables in the consumption space of high quality company that generates terrific free cash flows, high return on capital, return on equity, which have been sustained at almost 23-24% for extended periods of time. Almost for 20 years, we sustained more than 20% return on capital, return on equity. So I think even the valuations will sustain so long as the growth sustains, and there are no serious long-term structural roadblocks to growth. So for me, Asian Paints a long-term hold and a buy on declines.
Okay, that's the view that's coming in on the paint company. But with that, we're completely timed out on this edition of Hot Money. Many thanks to all of my guests for coming in. Samir, thank you so much for coming in. Vivek, thanks so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.